This is the Asia Trade. I'm Shery in Tokyo.
I'm April Hong in Singapore. Your top stories this hour. Asian stocks set for a cautious open after further losses in big U.S. tech. Traders awaiting Jay Powell's Jackson Hole speech amid signs inflation remains the major concern for policymakers. Fed Governor Lisa Cook says she won't be bullied into stepping down as President Trump demands her resignation over allegations of mortgage fraud. Plus, we speak exclusively to AIA CFO Garth Jones as the insurer reports strong growth in new business value underpinned by sales in Hong Kong.
Take a look at how we're setting up for the Asia market opens, because we're seeing very little movement on Nikkei futures, of course, after 2 sessions of losses already for the Japanese stock market. And this coming at a time that when we continue to watch the tech sector, of course, we continue to see that sell-off that's lasted for the past week is being really range-bound when it comes to the currency space as well. The Japanese yen holding at that 147 level against the U.S. dollar. It's been the case for 1 month. Implied volatility in G10 currencies to have fallen to the lowest levels in about a year. So really little movement when it comes to these asset classes ahead of Jackson Hole. Take a look at how U.S. futures are trading at the moment, because we had seen that pressure in the overnight session, a little bit of a let-up towards the end of the session. But it's really been about what we can expect from Jackson Hole and Chair Powell's speech. The dollar, for example, has fallen, but it reversed some of those earlier losses after we saw the Fed minutes really highlighting inflation risks. Of course, ahead of that, we had seen that downside pressure on President Trump's continued attacks on the Fed. U.S. futures not doing much at the moment as crude holds at that $62 a barrel level, April.
Yeah, Shery, it's really going to be all about the Fed. Minutes, as you talked about from last month's meeting, show that most Fed officials highlighted inflation risks as outweighing concerns about the labor market. And this comes as tariffs fuel that growing divide within the central bank's rate-setting committee. Let's bring in Bloomberg's Mike McKee, who joins us from Jackson Hole in Wyoming. Mike, really good to have you. We have these minutes from the Fed, but they also came ahead, right, from the July jobs report. How much weight should we be putting on that?
Well, we get a little more weight on them this time because all but 2 members who did dissent were in favor of holding rates and did not think that the labor market was a problem, as much of a problem as inflation. So it shows that the majority are already in the category of people who are worried about prices going up because of tariffs. And as you mentioned, this meeting took place before the latest CPI report in the United States came out and showed that there were tariff spillovers into inflation. We have one more CPI report before the next meeting, and if that shows that we have even more spillover, more rising prices because of tariffs, it seems that the Fed is set up to at least decide to hold rates instead of cutting them, as Wall Street expects.
And Mike, of course, we saw also the market moves today in relation to President Trump's comments when it comes to those continued attacks on the Fed, asking Governor Lisa Cook to resign on fraud allegations. What do we know at this point?
Well, at this point, there is no investigation and there is no evidence necessarily of a crime. What there is an allegation by a Trump administration official that Governor Cook committed mortgage fraud. Whether that will be followed up by the Department of Justice, we don't know. But Governor Cook today said that she will not be bullied into resigning her seat. Now, if she were gone, it wouldn't make a difference, really, in whether the Fed is going to cut rates or not in September. But it would give the president an opportunity to name another member of the Board of Governors and give him more control over what the governors do going forward. And so that may be the reason that he jumped on this and said she needs to resign. It's going to hang over the conference here, but I wouldn't expect a resolution on any of this in the near future.
Mike, also hanging on the conference in the sense of the questions around Fed independence, we have seen other central bankers kind of rallying behind Jerome Powell. Now they get to do it on U.S. soil. What are you expecting in setting the tone potentially at Jackson Hole?
Well, our Bloomberg reporters have been talking to central bankers in Europe who have suggested that they will repeat some of the comments they made at Sintra, which is the ECB's version of Jackson Hole, in June, where they defended central bank independence, noting that central banks that have the ability to do their own monetary policy without political concern tend to have stronger and better economies. They probably won't mention Donald Trump or even Jay Powell and the battle between them, but they will make it clear that they think the central bank independence is an important thing for the Fed as well as other central banks around the world.
How in line are central banks around the world when it comes to monetary policy? Of course, I'm in Japan, and we know that the Bank of Japan is going the other direction. But when it comes to monetary easing, what sort of message can we expect this time?
Well, that's going to be interesting because all of these economies have little bits of different kinds of economic situations going on that are leading them to do different policy moves. Japan, as you mentioned, is looking to raise rates. New Zealand just cut rates. Great Britain just kept rates steady, but suggested that they would be cutting rates in the future. A lot of this has to do with the U.S. and the tariffs. For the U.S., it may be inflationary. For other countries, it's probably deflationary, and they feel that they can cut interest rates. So it's going to be a while before they're back in sync.
Some really important conversations are going to be happening against this beautiful backdrop. Bloomberg's Mike McKee for us there. And for more on how markets are reacting to all these Fed developments, central bank developments, Bloomberg MLive strategist Mark Cranfield joins me in the Singapore studio. So first off, I mean, what are we seeing in the expression in markets of these concerns about Fed independence?
You can see that the Treasury yield curve is pretty steep. Tends to be getting a little bit steeper every time somebody speaks from the Trump administration to affect the market. So what you can see, this week we've had the S&P ratings company have reaffirmed the US sovereign rating, and yet the Treasury market didn't really respond to it at all. You would have thought there'd be a bit of a bid, bit of a rally in Treasuries given that confirmation, but that hasn't been the case. In fact, the yield curve steepened slightly afterwards. So there's clearly some skepticism from investors that these numbers are not adding up, that the fiscal situation isn't going to improve as quickly as some people like Scott Bessent seem to think it is. So that is holding traders back, particularly in the long end of the curve. The short end of the curve is more reflective of where people bet on the next interest rate move from the Federal Reserve. And this weekend will be very big in helping to determine how they feel next week about whether the next Fed cut is coming very soon or whether it's going to be delayed a little bit further. But Jerome Powell has an almost thankless task this weekend. Whatever narrative he tries to spin over the weekend, there's probably going to be external voices knocking him down, saying that he's wrong, that the Fed cuts need to come very quickly. So a very difficult period for him and for the other Fed speakers as well. There are just too many voices outside telling them what to do. To
be fair, he's been doing a really good job holding his ground. But I wanted to ask you about another central banker who will be at Jackson Hole, Governor Ueda. What are you expecting from him?
A couple of things here. So, as Mike was saying, it looks like all the foreign central bankers will get behind the idea that independence of central banks is a very important factor for investors and traders and for the markets in general. You would expect that. But Ueda didn't attend last year. And he's been given some cover by comments from Scott Bessent that Japan is behind the curve on raising interest rates. We have a very important Bank of Japan meeting coming up next month as well. And traders are already beginning to sense that Governor Ueda is looking for a window to do the next rate hike in Japan. The domestic situation has been against him, particularly politically. It's a very complex domestic situation. He doesn't want the pushback from politicians in Japan. But a major figure overseas has given him the go-ahead almost to say that rate hikes are on the table. You would expect him to sound relatively hawkish. And it's not unusual for central bankers when they go overseas to be a little bit more open with their discussion than they are at home. So there he is. He's on foreign soil. He's got the backing of the US Treasury Secretary. It's an opportunity for Ueda to really push the message that a rate hike is coming and it's not that far away. So currently it's a toss-up for the October meeting. September is still very low odds for the Bank of Japan, but the current pricing is a toss-up for October. He may well nudge it towards a fully priced-in rate hike.
And yet, Mark, we continue to see the weakness in the Japanese yen, not necessarily strengthening on the expectations of that hike, and even Japanese stock markets rallying. Valuations around the world when it comes to equities have been pretty stretched. There have been concerns about where we go from here. First of all, listen to Howard Marks from Oaktree about what he's talking about when it comes to the levels in these stock rallies.
I'm not raising an alarm bell, but I do think it's time for some caution. No reason to think there'll be a correction soon. But the point is that things are expensive. They may go on to become more expensive, but the fact that they're expensive, it should not be lost.
Watching Jackson Hole this week, of course, is it still all about central bank policy when it comes to investors and the rally that we continue to see?
Not only, because next week we have NVIDIA earnings, and there's nothing more important in the equity world than what happens with NVIDIA and their outlook, especially because of the whole AI story, which is still a huge driver of sentiment in equity markets, especially. So people will be very concerned to hear what does NVIDIA think about the future, how they obviously they want to know about the earnings that they're having for now, but also how they see demand for AI products in the months ahead. If you look at some of the people that they deal with, people like TSMC in Taiwan, the indications are very positive. It sounds as though there's no let-up. And if you hear about the amount of money being spent on data places, people where they need to store and produce the data needed for AI, there's still very high demand for that, which people are talking about trillions of dollars of investment going into that space. So expectations are very high. NVIDIA has beaten the bar many times with its earnings, but it's never been more prescient than it is right now. So really, it's almost as though equity markets are in a holding period. They just need to know what does NVIDIA have to say, and then people can relax if those numbers are very good. If not, if they disappoint, the downside potential is pretty big because NVIDIA price has pretty much doubled since that April dip. So really, there's so much resting on the numbers from NVIDIA and what they have to say about the future.
Yeah, options traders already fearing that deeper tech plunge and buying disaster puts. Mark Cranfield, good to have you with us, Bloomberg and Live strategist with a look ahead to the markets. Coming up on the Asia Trade, we also speak exclusively to AIA Group CFO Garth Jones about their earnings and new business outlook. Plus, a conversation on Korea's AI ambitions with Amazon-backed startup Upstage. And later, Northern Star CEO Stuart Tonkin joins us to talk earnings and gold prices. Much more ahead. This is Bloomberg.
AIA Group has reported a 16% increase in value of new business in the first half of 2025. It comes as Hong Kong insurers see strong demand from onshore clients hunting for better returns overseas amid lower interest rates in China. Joining us exclusively now is AIA Group CFO Garth Jones. Garth, really good to see you. Let's start with what was the great first half. What drove this, and what are you expecting going forward in terms of the rate of growth?
Good morning, Avril and Shery. Great to see you. We're very pleased with the first half performance of the business. We saw an excellent set of financial results and operating results in both growth of the business, the earnings growth, and in the growth in the value of the cash generation that we have. The value of new business, which is our key growth measure, grew by 14%, while our operating profit after tax grew by 12% per share, and our underlying free surplus generation, which is our key operating cash measure, that grew by 10%. I think importantly, the growth was broad-based. We saw growth in 13 of our markets across the business, with Hong Kong, our largest market, growing by 24% to $1.1 billion. We saw growth in ASEAN, that was up 20%, with particularly strong growth in Singapore and in Thailand. We saw growth in India, that was up 38%, and China grew by 10% on an underlying basis. Also, in the first half, we returned $3.7 billion to shareholders, and I think our confidence, the outlook for the future, is reflected in the 10% increase in the dividend. So overall, we're very, very pleased with the performance, a strong performance for the half year.
You talk about the Hong Kong performance, some of it also driven by mainland customers. How strong do you see the demand from there going forward? Could you put maybe some numbers to it?
Yeah, we saw very strong growth in the mainland Chinese visitor segment. That was up by 30%. It's around half of our business. But we also saw strong growth in the domestic segment. That grew by 18%. That's the other half. The business has been growing strongly over the last few years post-COVID. We saw strong growth momentum building from last year, and that's continued into the first half. As we look forward, we saw recruitment of new agents was very strong, with 15% growth in the recruitment, and that builds the momentum even further. So we're confident in the outlook for the Hong Kong business. We see strong demand, but we also see strong supply in terms of our agent productivity and growth.
Garth, when it comes to mainland China, how are you dealing with the lower rate environment and, of course, your expansion plans there? Have you seen any more approvals when it comes to regulation in different provinces where you operate?
Yeah. In terms of the interest rates, we take a position where we match our assets and liabilities for the very long term. So the average remaining duration of our in-force portfolio of bonds, for example, is more than 30 years. They've been invested in the past at very high rates, and so that's given us a very strong foundation. And for the new business that we layer on, successive layers of business that provide future profits, that we reprice on a regular basis. We repriced last year. We'll be repricing again from the 1st of September this year to reflect those lower interest rates. But importantly, a lot of the sources of the profit that we have in China come from our protection business. We're a big protection business seller. And those profits are immune to the interest rate movements. In terms of the new provinces, we're very, very excited about that as a future growth engine for the whole business. If you look back, we had the 5 original businesses. They're performing very well. Our differentiated premier agency in China has higher productivity than the rest of the industry, and that drives future growth. We've seen 18% increase in the number of new recruits. And in the new provinces, we saw 36% growth in the past year. And as we look forward, we feel those new provinces have substantial room for growth. And we're looking to grow those businesses by around 40% per year on average over the next 5 years. So substantial growth momentum there.
You mentioned other key markets as well, like Thailand, for example. We continue to watch central bankers getting together at Jackson Hole this week, and this monetary easing environment that we're facing now, given the growth stalling around the world on tariff threats. How are you assessing the environment in all of these other nations that could potentially see lower rates as well?
Yeah, I think the key thing with our business, Shery, is that we have a strong agency force, and that strong agency force is able to meet the needs of our customers, which are primarily around protection and long-term savings. People have low social provision in Asia. They need to save for their future. And we see that come through interest rate cycles. We've seen the Thai business grow by 35% over the first half, with very strong demand for protection products in both health and critical illness. Similarly, we saw growth of 16% in Singapore, which is driven by the stewardship funds that we have there, investment funds where the policyholders leave the difficult investment decisions to us. They've grown very strongly. So we see those needs continuing through cycles, and our agency force able to meet those needs and those demands for product.
Garth, what product lines in Thailand do you think can be a bit more resilient, though?
Well, we have 2 real focuses for the business. The first is the protection business that I've just talked about, the health, the critical illness, to meet the protection needs of our customers. But we also sell the unit-linked business there, which is tied to the performance of markets over a longer period of time. It provides our policyholders with the prospect of very good future returns, but it also contains a very low liability cost for the business. So those 2 types of business are very popular. We've seen strong growth, as I just mentioned, and they're very popular with our customers, and they're resilient to interest rate movements.
Tell us a little bit more about your customers. What sort of demographic are you targeting? Is it different by region? And of course, we know that high net worth clients are also a big focus.
We tend to focus on the middle class and affluent segments. In China, we have a differentiated business that is more focused on the upper middle class and affluent segments. But we also have a very strong high net worth business. Particularly in the global centers of Hong Kong and Singapore, where we see a lot of that business being booked. We've seen good growth in that business, particularly in Singapore. And as a result, we've dedicated a sales force to that. We have dedicated service, dedicated products, and so on. We've seen the wealth business continue to grow across Asia, and we're very excited about the prospects for that segment.
You touched on some of these interest rate environment backdrop earlier. I wonder, what about the exchange rate? What we're seeing in markets volatility, do you see that as a potential risk? How manageable is all that?
Well, we have a diversified business, so that clearly helps us. We're a local business. We sell our products in local currency. We invest in local currency. The Hong Kong business is, of course, a US dollar-based business, and that's about 35% of the business. But the rest of the business is non-US dollar currencies and is well diversified. That helps us through currency movements and so on. But we're a long-term business. We're a sustainable business, and we take a longer-term view. And we find that over time, those currency movements even out. Overall, you can see that in our numbers, where we've benefited from a weaker US dollar in our numbers. But, you know, we look through it to constant exchange rates where we saw operating profit grow 12% and our value of new business growing by 14%, as I say.
Garth, always good to have you on the earnings day. Congratulations on the results. Garth Jones, AIA Group CFO. And we have more when it comes to earnings coverage here on Bloomberg Television. We'll hear from executives from Northern Star, Sun Hung, and Casino Biologics as well. More ahead. This is Bloomberg. We'll be watching the tech sector across Asia in today's trading. Of course, we continue to see the sell-off in Wall Street. The Nasdaq 100 losing ground for a second session. The Magnificent 7 gauge losing ground for a fourth consecutive session. We have seen SoftBank already under pressure in the last close. Of course, we had seen that $40 billion stock rally that's hitting a wall. We're talking about overbought territory for SoftBank, not to mention that really trading is already above analyst target prices. TSMC, for example, in the overnight session also falling through the 50-day moving average. So we'll be watching Taiwan when the market opens there. You can see U.S. futures unchanged at the moment, but the Nasdaq 100 volatility rising against the S&P 500 on that chart on the right as we continue to see these gyrations in mega cap tech stocks. We have more ahead on the Asia trade. This is Bloomberg. We're watching Microsoft limiting Chinese companies' access to early warnings about flaws in its technology. This follows an investigation into whether a leak led to a series of hacks exploiting vulnerabilities in its SharePoint software. Let's get more from our Asia tech correspondent, Annabelle Drewlers in Hong Kong. Belle, what do we know so far?
Yeah, well, this is a change that took place last month, and really there are a lot of details in it, but just to break it down, so Microsoft operates what's called the Microsoft Active Protections Program, or MAPP. The goal of that is to give security software companies early access to flaws in its systems or its products, so then they can provide updated protections for their customers faster. So it operates worldwide, this MAPP program, but what's happening now is that access to it is going to be limited in places where MAPP participants are required to provide or report those vulnerabilities to local governments, and that does include in China. So as you said, Microsoft has faced a series of hacks, and most recently, as you said, on its SharePoint software. We've reported previously that there's been a concern that hackers could have been aided by MAPP partners leaking the flaws. So now, as I said, MAPP participants in places like China aren't going to be receiving any advance warnings. What they're going to get instead is just some brief sort of details on the vulnerabilities, but none of the sort of source code or the fixes in any great detail, and they will get it later when the actual fixes are released to the market as well.
Belle, on the earnings front, we had Baidu numbers overnight. What were your key takeaways?
Yeah, well, the numbers were not that great overall. I mean, we kind of saw that reaction in ADRs, for instance, overnight. Slight slip, I mean, down 1%. But essentially, quarterly revenue was down the most since 2022. Sales dropped 4%, so it came in at around $4.6 billion US, even though actually net income was up more than 30%. So there were a couple of different things to take away from it. The search business, that's sort of the bread and butter business of the company, that continued to see weakness. Of course, it's sort of, there's always that risk. Is it being cannibalized by their AI projects? The co-founder, Robin Li, on the earnings call said that they're still a ways off being able to monetize a lot of their AI efforts, and that they're going to continue putting money into that. In the meantime, the cloud business actually managed to pick up. The concern, of course, cloud is a highly competitive market in China. It's a low-margin business as well. It is, in addition, accelerating its robotaxi business. That's the Apollo Go robotaxi service. So just some of the key different areas to watch. But as we said, overall, not that much for investors to really take away from as a positive reading.
Yeah, Robin Li, as you alluded to, seems to be managing expectations about monetizing AI. Meantime, Google also just unveiled a range of new gadgets, and they have a big focus on AI, Belle.
Yeah, that's right. So we got several new smartphones, we got a watch, we got some new earbuds rather overnight as well. And all of that is supposed to be really trying to show off the advancements that Google is making in integrating AI. So we've got the new Pixel lineup that consists of the Pixel 10, Pixel 10 Pro, XL as well, Pro Fold, and that's going to range in price from $800 to $1,800 US. The Pixel Watch, that costs up to $400, and the earbuds will be retailing for $130 as well. Across the board, we are seeing them integrating their Gemini AI assistant, rather. That's a platform that it's grown increasingly confident in as well, and really that focus of how that Gemini AI assistant can also catch up to OpenAI as well. But it's increasingly trying to position Gemini AI not just as sort of a regular chatbot or voice assistant, really trying to push or try and draw out those agentic capabilities or agentic AI capabilities it has as well. So Gemini also, or Google rather, really trying to make the point that their products have a greater use of AI than perhaps we see from Apple, for instance.
Annabelle Jewelers there with the latest on the tech sector as we continue to watch artificial intelligence. Also in South Korea, AI firm Upstage has just closed a $45 million Series B funding round backed by Amazon, AMD, and Korea Development Bank that brings its total capital to over $150 million. The startup provides its solar language model and AI tools for customers to streamline documentation and workflows. CEO and co-founder Sung Kim joins us now exclusively from Seoul. Sung, it's really great to have you with us. What are your plans for this new capital infusion?
Right. So I think we're very happy to get the 45 million Series B round led by KDB, Korean Development Bank. As you know, the AI is a really big agenda in Korea, and KDB is just a government-backed policy bank. So they invest all kind of AI value chains, including AI chips, AI models, and then AI services. And then they pick the Upstage as a software side of their AI investment. And then more importantly, this round actually have backed from the global hyperscalers, both Amazon and AMD Ventures. They just join us not only just investors, but as a strategic partners. So they will provide us instant platform to scale our products globally. So using this capital, basically what we want to do is that we want to excel our solar LLM furthermore, and then we're gonna expand this business from the just across Korea, USA, Japan, and APEC area.
You mentioned how the Korea Development Bank has been leading this. Of course, it's a big government effort right now in South Korea as well. Do you expect there to be more traction when it comes to South Korean technology, given, of course, the U.S.-China rivalry? And so far, we have seen these two countries dominating the AI space. Do you think that this rivalry will actually help companies like yourself?
Definitely. So I think the Korean traditionally, we are the one of the few countries that have our own digital services native from Korea. For example, huge search engine like Naver still is #1 search engine in Korea. Also, KakaoTalk, if you know, the #1 messengers in Korea. Similarly, the government want to push that the AI services coming from Korea will dominate in Korean services. Not only the Korean, we want to expand to other countries as well. So the Korean governments and with the KDB, they kind of put huge capitals, including GPU support. And then they also provide very specific data set, which probably is not accessible to other AI companies, but they kind of provide those data to our Korean AI companies. So this will hugely improve the entire LLM and then AI performance, and definitely this can compete with globally.
So part of efforts to help South Korea retain its competitive edge, but I wonder, as you see the growth of the company, what are you watching in terms of the metrics, the milestones?
Right. So basically, the developing good LLM, high performance LLM is one thing, but really the more important thing is that how we're going to use that LLM in real industry, or especially for the real work. So our vision for this LLM or AI is that we want to create the future of the work, especially for the enterprise. So as you probably see, the LLM is very popular in even enterprise workers. But if you see, this LLM is partially used in the daily work basis, right? So most office workers still, they do most of the jobs doing manually. So what we see is that we want to bring this gap together for the office workers. So obviously, current the frontier models, they're very strong, they're very good, but their focus is more like solving very difficult math problems or physics problems, right? But if you really try to use this one in the enterprise environment, probably they are not very good enough. So on the other hand, what we do is that we actually build a Solar LLM to tackle this specific document-heavy and then process-driven enterprise workflows. So the most office workers actually doing a daily basis. So our focus is to really entirely change this the future of the work, so that people can rely on the agent Solar LLM, so that they can put all the office work for the AI automation.
Right. What have you been seeing in terms of customer acceptance and the uptake from some of these enterprise clients?
Right. So especially we working on the insurance companies, and then they firstly deal with lots of documents with lots of numbers. In here, they are not really tolerant in the hallucinations. If there is any mistakes in numbers, it's very, very difficult to use. So our focus is that how can we bring this LLM to provide the most accurate, especially in terms of dealing with numbers, so that if we can we can provide a very, very high quality accuracy in numbers and summarizing these numbers, then they are very happy about this one. So they can accept this solution better than just the general LLM providers.
Sung, what about cooperation with other Korean startups? We understand that you're working with chip design companies as well when it comes to some of those chips that could be used by Upstage. Tell us a little bit more about those collaboration efforts.
Right. In Korea, we do have a very famous NPU companies, especially they're focusing on the inference side. So as you know that the inferencing cost is getting higher and higher, and then especially enterprise use like a huge amount of tokens per day, and then it's very, very expensive. So currently what we are working with Rebellions and then Furious and HyperXL is that we want to build our model itself to fit to their NPU so that they can provide much more efficient in costly and then the speed-wise so that we can serve large scale of the enterprise customers with a very low cost.
Right, Sung Kim, CEO and co-founder of Upstage. Really good to have you with us, and congratulations on your latest funding round. A reminder, the Bloomberg Tech Asia returns tomorrow with humanoid robots taking center stage. Tune in Friday at 8:30 a.m. Hong Kong time on Bloomberg Television. That's 8:30 p.m. Thursday in New York. Subscribers can also stream it through the terminal using TV Go.
In the meantime, ahead on the Asia trade, a closer look at China's stock market that's seemingly defying gravity, with the rally persisting despite a struggling economy. More in a moment. This is Bloomberg. China's Kuaishou Technology reports earnings today, and attention will focus on how the company is building on its early success with AI-generated video service Kling. Let's bring in our China correspondent, Min Lo. So, Min, what are you watching out for in terms of earnings and this video service, what it means for its AI aspirations?
Yes, the video service is really going to be closely watched because Kling really had exceeded analyst expectations so far in terms of its ability to monetize. The company earlier in the year had provided guidance that they are looking at about $100 million in revenue from Kling this year. But Citigroup is saying that they are seeing upside potential to that. But you look at the chart, we're looking at revenue growth of about 11%, net income increase of about 11% as well. A lot of it coming from that Kling, its subscription growth. Investors will be looking out for its expansion plans there. But going to its other core businesses like e-commerce, live streaming, that's where we might see the government subsidies providing some support to that segment of the business, but it's still facing very intense competition from the likes of Alibaba and Douyin. And when it comes to ad sales as well, it could be facing headwinds given the slowdown in the economy and in terms of people's spending, appetite for spending.
And it's really deep in the earnings season, so we also have Bilibili. Could we see some sustained profit gains in this company as well?
Yes, Bilibili as well expected to do quite well this term because of a hit game that they came up with recently called Sanmo, and that is where we expect to see the gaming revenue pick up. But still, longer-term investors are a little bit cautious about its growth prospect there because, again, there are big juggernauts that it's fighting against like Tencent and NetEase, and investors are saying that this company will have to keep coming up with consistent hit games to keep up that momentum. And when it comes to its advertising sales, that's where we are seeing pretty strong showing there as well because of its strong positioning among the highest spending Gen Z cohort.
Bloomberg's China correspondent Min Lo there with the latest on what we can expect during the earnings season in China. And we're also watching HKEX, the CEO Bonnie Chan now saying that she's confident that the IPO boom in Hong Kong will continue thanks to international investors' renewed appetite for Chinese assets. Chan also told us how the exchange plans to sustain its strong performance following a record profit in the second quarter.
You know, what really stands out for me for this quarter is the fact that it's riding on a pretty sustained momentum. If you look at our results, this is actually another set of record half-yearly results. We deliver a pretty strong set already for the second half of 2024. Gradually, we're seeing a return of interest from international investors, and they want to, again, look for opportunities to deploy more capital to this part of the world.
The key question is it sustainable? What could extend this streak?
We saw this momentum started actually in the second half of last year. And so far, it's been sustaining quite well. International investors are really, again, focusing on China assets. And I think as they try to come back to treasure hunt, it is a very good thing that we have equally a robust pipeline to match their appetite. We have currently over 200 companies already having filed their applications. And in fact, on a daily basis, I'm speaking to a lot more. So I think, with the backdrop of, really the interest returning in earnest, as well as, all these very exciting investment opportunities coming online, I do hope that the momentum can carry on.
How confident are you that Hong Kong can reclaim the #1 IPO venue this year?
At the moment, we're in a very good position. And we do have the pipeline to help us deliver and stay up there. But to me, the more important thing really is to make sure that we are able to support the fundraising needs of these companies. And this year, I keep talking about the IPO pipeline. We also need to look at the follow-on fundraising, which in fact has raised more money than the IPO proceeds. So year to date, we have raised about $16 billion, close to 17 for by way of IPOs. But we have actually more than $40 billion raised by companies already listed on our exchange. So long as we continue to support the fundraising needs of these companies, we continue to improve our listing framework.
Are you still doing a lot of marketing, or do you think companies are starting to come to you now?
Well, I think both. I mean, companies certainly, I think, saw how well we've done in the IPO space. And so I think on the average, I probably meet 2 to 3 companies per day. And I want to expand the universe a little bit. I think it's very encouraging that in the past few months we have seen an increased appetite of companies beyond just the mainland China wanting to pick Hong Kong as their listing venue. So year to date, we've listed companies from Thailand, from Singapore, and there are more in the pipeline. So I certainly will do more in terms of this marketing activity.
There are those out there that do call this recovery you're seeing as something that's made in China. Mm-hmm. That what you're seeing in terms of the pipeline has been really driven by government policy, geopolitics.
Well, first of all, I don't think I'm surprised. I mean, just considering that China is the second largest economy of the world and it's capable of producing so many exciting companies which investors around the world want to invest in, right? So to me, it's natural and totally understandable, this made in China phenomena. But that said, given that Hong Kong is an international financial center, and we stand in the middle as a super connector between mainland China and the rest of the world, what I would like to see is to really continue bringing more participants into the universe.
HKEX CEO Bonnie Chan speaking with the China Show co-anchor Yvonne Man. More ahead on the Asia trade. This is Bloomberg. The latest from the corporate front, Bloomberg has learned that Temasek is considering one of its biggest organizational overhauls in years to boost returns and efficiency. Sources say Singapore's state-owned investor may divide its business into 3 arms focused on domestic, foreign and fund investments. The move would fundamentally restructure the 51-year-old giant amid rising pressure to deliver higher returns and streamline operations. Fashion brand Guess is going private in a $1.4 billion deal with Authentic Brands and company co-founders. Shareholders will get $16.75 in cash per share, a 26% premium to the Tuesday close. Guess management will keep running the business while Authentic takes a majority stake in its intellectual property. Sony will raise the US price of its PlayStation 5 video game console to $550, a $50 increase. It's following rival console makers Microsoft and Nintendo in hiking prices as tariffs increase the cost of imports. In a blog post, Sony says it's navigating a challenging economic environment. And Honda Motor has signed a multi-year agreement with US startup Helm.ai to develop self-driving capabilities. In a statement, the company say they'll produce advanced driver assistance systems for Honda's mass-market vehicles by 2027. Helm was founded in 2016 and has raised more than $100 million, including at least $30 million from Honda.
Now take a look at some of the stocks that we'll be watching when the market starts trading in Japan, South Korea, and Australia. When it comes to SoftBank, take a look at the last close because it was downside of more than 6%. We could move again today. We, of course, continue to see the sell-off in U.S. tech, concerns over its $2 billion investment in Intel as well. On Wednesday, SoftBank saw its biggest intraday decline since April. CNBC reporting Intel is in talks with large investors for an equity infusion at a discounted price. We're also watching Northern shares after the Australian gold miner posted a 110% surge in full-year net income, revenue climbing 30% to $4.12 billion, driven by strong gold prices and haven demand amid tariff uncertainty. We'll be speaking to the CEO of Northern Star in the next hour. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens with all eyes on Jackson Hole and, of course, Chair Powell and his speech on Friday. April, will he signal a cut from the Federal Reserve come September at a time when the Federal Reserve continues to be attacked by President Trump for Fed officials to move and cut those rates?
Yeah, Chair Powell will really have his work cut out for him when he speaks at Jackson Hole. But being said, all things considered, he has been doing quite a good job in helping markets recalibrate some of their expectations. Think back to the last Jackson Hole. This will, of course, be his last one as Fed chair. Shery.
We'll be also watching what BOJ Governor Ueda has to say at a time when we continue to watch the Japanese yen and the Japanese markets as well. The yen has been pretty range-bound in the last few weeks. We're talking about that 147 level against the U.S. dollar. In fact, G10 FX currencies 1 month implied volatility at the lowest levels in about a year or so, as we're, of course, bracing for what could come out of Jackson Hole. Nikkei right now stocks falling for 3 consecutive sessions already. We're talking about downside pressure, of course, coming from also the tech sector. We had another sell-off in the overnight session. We're watching JGB yields very closely, the 10-year yield at the closest levels that we haven't seen since around 2008 or so. Super long yields also much higher, 30-year yields at levels that we haven't seen in ever near record highs at the moment, given fiscal concerns ongoing here in Japan. But take a look at how South Korea is coming online as well, because we do have trade numbers out of South Korea for the first 20 days of August. Guys, if you scroll up, we can actually see that those numbers for exports rising 7.6% year on year. When it comes to the import numbers as well, a gain of 0.4% year on year for a trade surplus of $833 million. And you can see the cost be gaining 0.4% right there as the Korean won is holding steady. We have seen significant pressure on the Korean markets this week. Again, sort of that risk-off caution ahead of Jackson Hole.
Yeah, that's certainly playing out in treasuries. Take a look at how the U.S. 10-year, some pressure coming on there. But it's not just about the Fed, of course. Yesterday, we had a more dovish than expected RBNZ. So we're watching the Kiwi as well against the greenback. It is picking up slightly. But in Australia, we're really going to be watching out for how investors digest earnings. We had the likes of Northern Star, for example, full-year net income more than double. So there are these bright spots in Australia markets, given how gold has been performing. The ASX 200 is extending those gains from a day ago. Shery.
Let's bring in Deborah Cunningham, CIO of Global Liquidity Markets of Federated Hermes for a look at what to expect this week on the markets. How are you positioning for Jackson Hole, and what will you be watching out of central bankers this week?
Our expectations really for Jackson Hole is that Chair Powell will use this as maybe his last swan song. We do expect he's been kind of priming the market for allowing us to expect some maybe change in how the Fed communicates, perhaps some change with regard to the press conferences that follow each meeting, the dot plot and how it's disseminated and what the expectations are based from that on a quarterly basis. We think that it will be more those types of announcements that come from Chair Powell's speech, not necessarily something that leads the market one way or the other from a directional standpoint with the September meeting as to whether they'll cut rates or not. Having said that, it's been noted, I think, from a market perspective, that if he does not address that topic, the markets won't like the speech at all. And, backlash can happen from that standpoint.
Yeah, given how priced in it is for those cuts come September. But when it comes to further signaling for the rest of the year, what will you be watching that could potentially move the markets? And are there any assets that are more vulnerable at this point?
Well, I do think that you're looking at data dependency continuing, and I think he will emphasize that, which is not going to make the administration very happy. Having said that, I think the data that we've been getting has been mixed enough that we've moved our own call from what would have been an October decrease in rates by 25 basis points, by the Fed to a September one, and ultimately that's based on some of the mixed data that we've seen with the employment report, especially in the revisions that came about from that, CPI being relatively tame, but then PPI on the other side of the equation, retail sales, housing, all having some pretty strong numbers. So the mixed numbers are sending off different signals to the market, which is why I think when you look back at the employment report and what was inferred from a September rate cut expectation standpoint right after those numbers, it was 120% or so. And we're now down to something that's just above 80% on an expectation of a 25 basis point rate cut. So data dependency and what, the additional numbers are between now and then, I think are important. I think one other thing that they're going to be looking at is soft data versus hard data. We had a wide divergence between those two types of numbers 2 months ago, and then they've converged. And most recently, maybe a little bit more of a divergence has started again. So I think that's another important set of economic statistics that the Fed will be watching.
Deborah, I guess to your point, Powell has been very skillful in managing expectations, pointing things back to the data. But at the last meeting, we did get two dissenters. I mean, going forward, might he really have his work cut out for him? How much harder is this going to be?
Yes, there were dissenters, two dissenters at the last meeting, and it would be expected that those two would continue to be, in dissension for holding rates steady. They would want to cut rates. Both of them are, potentially viable candidates to be replacing the Fed governor position that ends in January of 2026. So they're going to go along those lines, vote along those lines for a decrease in rates. We'll see what Steve Moran, who is the nominee, whether he's actually a voting member yet been confirmed yet for the September meeting. He could actually be a third dissension. And then you've seen other Fed governors. You've seen Daly. You've seen various Barkin, where essentially they're feeling like there's not pressure right now to lower rates. So I think it will be more difficult to, put everybody in the same path, that there are going to be dissensions. And if you looked at the Fed minutes from the last meeting that were just released, those ultimately confirmed that there is a concern about inflation, but at the same time, there seems to be equally an amount of concern about slowdown from an economic standpoint, and making sure that there's no expectation of going into any type of recession. Which ultimately, with the 3% GDP rate in the second quarter, we're not near that. But there is still concern and watch over that type of differential between the various voting members of the FOMC at this point.
The slight uncertainty is also providing investment opportunities. What are you advocating between now and the September meeting?
Well, there's a lot of volatility, but with volatility, like you said, comes opportunity. So, we are advocating at this point getting a little bit longer from a duration perspective, but doing it at the points in time in the market when we're getting a little extra yield in the process, and a little bit longer dated securities are helpful in that process as well. We're advocating, looking at more of a barbell structure. So the front end, until the Fed moves, continues to hold up pretty well. And if you look at the rest of the curve, it's flat to slightly inverted. And so you're still well positioned to hold a substantial amount at the front end, but with the barbell structure that's offset with the lengthening duration by the longer dated securities, again, using the opportunistic trade from a range trading perspective that you get in this type of a fairly volatile market where, spreads of 10, 20, even 30 basis points differential from day to day are not really all that uncommon.
Deborah, talk to us about some of these fiscal concerns on the long end that haven't really gone away. And to what extent do you think potentially tariff or chip revenue might help to mitigate a bit of this? Well, certainly the tariff revenue and if you go back to the April announcements of tariffs, there were violent reactions in the marketplace, both equity and fixed income, short and long, across the curves, across all markets. And those have essentially dwindled with what has been, passing time, some agreements being settled, some tariff agreements being settled at much lower numbers than what had initially been announced. And with continued latitude, it seems like, to be able to extend those negotiations going forward. So the market has, taken a little bit more in stride the daily information that we get from a tariff perspective. Having said that, when you look at the tax bill, the one big beautiful bill that was agreed upon in July, with the cuts that are coming from that perspective in revenue, there's a need for replacing that revenue or having a deficit that goes higher than it is today. That is not, I think, something that most in Congress would like to see. And so where does that come from? Potentially from the tariff revenue. That's not going to cover all of it. There, needs to be different productivity gains and other things that occur also. But, I think the Congress is looking at tariffs as a way of closing that gap to some degree that the one big beautiful bill information has provided us with at this point. However, it doesn't happen quickly is generally, I think, the market's concern. How quickly it happens is going to be, a key, I think, to the success of this or the failure of it. Deborah, it's been really good to get your insights. Thank you so much. Deborah Cunningham is CIO of Global Liquidity Markets at Federated Hermes. Now, let's also take a look at some of the stocks in focus in Australia on the back of these earnings. Full year net income for Northern Star, the largest listed gold miner on the ASX, about double. So you're seeing investors rewarding the company 3% higher. This is bucking what we saw earlier in the week where the stock really came under pressure. Whitehaven, though, is coming in the other direction, although full year net income was higher than estimated. Fonterra is another company that we're watching as it lifted its milk price forecast to 10.15 New Zealand dollars. So those are among the counters we're watching in both Australia and New Zealand. And still ahead on the Asia trade, we speak live with Northern Star Managing Director and CEO Stuart Tonkin about their earnings and their outlook for gold. Much more ahead. This is Bloomberg.
We're watching Asian tech stocks, of course, after that week-long sell-off that we've seen in the sector. We've continued to see the downside pressure on SoftBank after that $40 billion plus stock rally this month, hitting a wall. Plans to invest $2 billion in Intel really being scrutinized. We have seen them in overbought territory and also trading further above analyst target prices for quite some time. Samsung Electronics at the moment, though, gaining ground. We had seen some local reports that Samsung had passed the HBM4 chip had passed NVIDIA's reliability test. And of course, we have been waiting for certification in that deal with NVIDIA to come very soon. SK Hynix losing more than 2% at the moment. Overnight, we're also following Microsoft limiting Chinese companies' access to early warnings about flaws in its technology. This follows an investigation into whether a leak led to a series of hacks exploiting vulnerabilities in its SharePoint software. Let's get more from our Asia tech correspondent Annabelle Drewlers in Hong Kong. Belle, so what do we know at this point?
Yeah, so the change actually took place last month. There are quite a few details in this, but just sort of to give the main takeaways. I mean, Microsoft operates what's called the Microsoft Active Protections Program, or MAPP, and the goal of that is to give security software companies early details on product flaws, so then those companies can then provide updated protections for their customers faster. This operates worldwide, but what's going to happen now is that access is going to be limited in countries where MAPP participants need to report vulnerabilities to their governments, and that includes in China. So, as you said, Microsoft has faced a series of hacks, most notably or most recently on its SharePoint software, and we have reported previously at Bloomberg that there's been a concern that hackers could have been aided by MAPP partners leaking those flaws. So now MAPP participants in places like China aren't going to be receiving any advance warnings. They're going to instead learn general details of the flaws as security fixes are released. That's the big change.
And Belle, on the earnings front, we had Baidu numbers overnight. What were your key takeaways?
Yeah, well, we saw that reaction in ADRs, for instance. They slipped into the close down around nearly 3%. But overall, look, there weren't too many positives really in this. Overall, sales were down 4% to $4.6 billion, even though net income actually did rise more than 30%. But some of the main takeaways, well, firstly, we saw further weakness in the ad revenue business. That is really relating to the search business, of course, the bread and butter one for the business, or Baidu. Concerns about how AI projects rather are sort of cannibalizing perhaps some of that revenue as well. The co-founder, Robin Lee, in the earnings call said that they're going to continue spending and increasing their spending on AI, but they're still a ways off being able to monetize it. In the meantime, we also got an update on the robotaxi business that is continuing its global rollout. So that was sort of one of the more positives. And as well, the cloud business picked up, although that is sort of a lower margin business as well.
Annabelle Drillers, our tech correspondent there. And of course, Belle and I will be returning with Bloomberg Tech Asia tomorrow. Humanoid robots taking center stage this time. Tune in Friday at 8:30 a.m. Hong Kong time on Bloomberg Television. That's 8:30 p.m. Thursday in New York. Subscribers can also stream it through the terminal using the TV Go function.
And Shery, Google, in the meantime, says Gemini is a major part of its strategy as the company deepens its integration of AI across products. We spoke to the company's SVP for platforms and devices, Rick Osterloh, as it launched a new slate of consumer gadgets, including smartphones, a watch, and wireless earbuds.
Gemini is a huge part of Google's strategy. We've made so much progress with it. We've got the best models around. We have the best AI assistant. We're just so excited about what we've talked about today. And
yeah.
I personally love using the VO video model. You saw a video of my dog talking in the show, which was really fun to put together.
A cute poodle across something.
Yeah, he's a Portuguese water dog who somehow speaks English. But it was really, really fun to put that together. And this is kind of the power of AI now. You can do things for fun, you can be a lot more productive with it, and Gemini is the thing that powers it all for us.
I mean, Steph Curry's doing things with sports. You had Alex Cooper there, Call Her Daddy, doing things with camera. I'm interested, though, how this sets you apart. What are you offering, do you think, versus the competition? How am I going to be able to use it in a wholly different way than currently I could with a competitive out there?
Yeah, well, I mean, I think AI in general just transforms all of these products.
Yeah.
On the phone, it's going to make it so much easier to interoperate with your phone. You just talk to the AI and it'll do things for you. You can show your camera to the AI and it'll give you hints about what to do, like if you're trying to do a project at home, like fix some plumbing or fix some shelves, whatever it is, AI can help. And we're really excited about our partnership with Stephen Curry to apply this AI technology to personal coaching. And, you know, I can't think of a better person to work with than him. He has sleep coaches, nutrition coaches, fitness coaches, and he wanted to work with us to bring this kind of capability for personal coaching to everyone. And so that's what that partnership's all about. We're really excited to work with Steph.
And in many ways, you were helping oversee the purchase of Fitbit back in the day. It's now in the form factor of a watch that you've got on. Rick, though, what form factors are we yet to see? We've got the pods in your ears, you've got the watch, you've got the phones.
Right.
Where next?
I think there might be a few coming next. Well, we're bringing Gemini to a bunch of surfaces you use every day, but they'll probably be used very differently, like automotive. There'll be Gemini in your car, on your television, in your smart speakers and smart displays. But I think a really exciting thing that'll come in the future is Gemini in glasses. So we're working on smart glasses that'll run Gemini as the main way you interact.
Any sort of year that you think that'll be coming out? Is this going to be
it'll be
Brooklyn
coming out
2027?
Sometime next year. Will be pretty exciting to see.
Google Platforms and Devices SVP Rick Osterloh speaking with Bloomberg Tech's Caroline Hyde. More ahead on the Asia trade. This is Bloomberg. Oaktree Capital's co-chairman Howard Marks warns U.S. stocks appear to be in the early days of a bubble. Marks spoke exclusively with us about his concerns over rising valuations and investor complacency.
This is all just feeling and an opinion. None of this is factual, but it does seem that stocks are expensive relative to what I call fundamentals, or you might call reality. And, you know, the outstanding reason, I think, is that, you know, there hasn't been a serious market correction in 16 years. So people get out of the habit of thinking about market corrections. The biggest single mistake, I've been thinking a lot, what is the biggest single mistake investors make? And I've concluded that it is that they conclude that the way things are today is the way it'll always be, and the things that have been happening will always continue to happen, whereas reversion to the mean is much more likely. So I just think that it's worked very well. Being an equity investor has worked very well. Doing it on leverage has worked even better. Concentrating in a few stocks has gone very well. Investors are by nature optimistic, and that optimism dies hard. I just think that the fluctuations of the market are mostly related to psychological fluctuations, and people go from neutrality to liking stocks, to liking them a lot, to liking them a ton, to liking them too much. And that's the continuation that creates bubbles. And, we're probably in the early days of that.
When you talk about liking, Howard, maybe liking these assets a little bit too much, can you put into perspective the last time you saw this type of environment that left you thinking maybe some of the opportunities aren't as great when it comes to buying some of these assets at current valuations? Is there another time that this sort of reminds you of in any capacity?
Well, I guess, Lisa, the last time was probably around 97, when the market was kind of falling in love with tech stocks, and the market was rocketing along. People were not worried about the level of valuations. People were extremely optimistic about the opportunities for the internet, Alan Greenspan famously cautioned that there might be irrational exuberance. Now I picked 97 because even though Greenspan was concerned about exuberance, the market went on to rise for another 2.5 to 3 years. Remember, I said we're in the early days.
Oaktree Capital co-chairman Howard Marks speaking exclusively with Lisa Abramowitz there. Take a look at how European futures are trading at the moment after gains that we saw in the past 3 sessions. Of course, it's all about Jackson Hole this week at a time when inflation is also surprising to the upside in the UK, climbing to an 18-month high. Already in Sweden, the central bank holding steady because of a price spike there. This is Bloomberg. We have breaking news out of Japan. We are getting the latest PMI numbers for the month of August. These are the preliminary numbers coming in for the composite at 51.9, a slight improvement from the previous month and also in expansionary territory. But when it comes to manufacturing PMI, still in contraction territory. It's been fluctuating between contraction and expansion above that 50 level, but it's been mostly below that 50 level for the year. Services PMI also 52.7, a slight deceleration from the previous month, but this, of course, not surprising given that we just saw Japan's exports' steepest drop in more than 4 years, given the ongoing concerns over U.S. tariffs, Avril.
Yeah, those tariff concerns, the geopolitical backdrop. Take a look at how gold is faring. It is sitting a bit softer at the moment. It's also really interesting that even as we see Fed independence concerns playing out, that gold is watching out for these Fed signals, watching out for geopolitical developments. And it has actually been, despite the gains, been trading in quite a narrow range. And it's actually been forming this so-called wedge pattern, which to some speaks to the potential for a bearish reversal. So a bit softer at the moment on gold spot. But as I said, it's been quite the climb. Bloomberg's Paul Allen joins us now in Sydney. Paul, the rally in gold prices has also been great news for Australian miners, with Northern Star reporting net profit more than doubling in the past 12 months. What were the key takeaways from the report?
Yeah, Avril, the words gold and record tend to appear in the same sentence a lot these days. Northern Star's Australia's biggest listed gold miner now, and yeah, it's just had a record year. 110% was the rise in net income, $862 million US. That's about 1.34 billion Aussie dollars. And when you price gold in Australian dollars, the story just becomes even more incredible. It's been above $5,000 an ounce now since April. And this has allowed Northern Star also to pay a record dividend, Final dividend 30 cents, full year dividend 55. Even gold sales were higher as well at 1.63 million ounces. There are a few things to watch out for going forward, and we can unpack this in a moment with the Managing Director of Northern Star, Stuart Tonkin, who's going to be joining us. The most famous assets of Northern Star is without doubt the Super Pit. This is the giant open pit mine in Kalgoorlie. That's currently undergoing a major expansion to improve production and processing of ore as well. And then we'll be closely watching the future of the Hemi asset as well. This is recently acquired by Northern Star after it took over De Grey Mining back in May of this year. This is one of the industry's biggest undeveloped projects in the Pilbara, more famous for iron ore in Western Australia as well. For the coming year, Northern Star maintaining sales volume guidance, costs between 2,300 and 2,700 Australian dollars an ounce, so obviously still well below the gold price at the moment.
Paul, stick around. Let's unpack, as you say, with Stuart Tonkin, Managing Director and CEO at Northern Star, for his first interview after those earnings. Stuart, first of all, congratulations on a stellar full year. But we also know how in the past couple of quarters there have been a couple of misses, whether it's sales guidance, CapEx, all-in costs. Super Pit, as Paul mentioned, what is the plan here to get operations back on track?
Yeah, thanks, Avril. Thanks for having us on the show. Absolutely, we're in a building phase, and it's not a straight line, and we've had the challenges of the last year, but we're very proud of the results we published today. Very strong, forward outlook, very strong balance sheet, and those earnings that really underpin our organic growth pathway. So, yeah, we're very encouraged with the environment we're in and the assets in front of us with a multi-decade outlook. We're patient, and it's paying dividends as was announced today, and continuing to improve, return on capital employed metrics, our cash flows, and the outlook.
Yeah, paying dividends quite literally. You have been returning cash to shareholders as well. But what's the plan in terms of putting the rest of this money to work?
Yeah, thanks, Paul. Look, we see huge opportunities in our organic investments. So that the Fimiston Mill expansion at the Super Pit, we're effectively going to double the throughput there to 27 million tonnes by FY29. That asset's going to be top 5 global gold mine, producing over 900,000 ounces per annum with multi-decade outlook. So those are the returns that are so compelling for investors to look at Northern Star for the long term. And there's lots of other organic opportunities that we've reliably added ounces of resources ounces for $20 an ounce through our exploration efforts, growing significant resource bases. So these surpass even dividends or share buybacks. These organic returns are very compelling for reinvesting in a gold business today.
Yeah, I was fortunate enough to get a tour from yourself of that new facility at the Super Pit, and we'll be bringing viewers more on that in a couple of weeks. We'll have a documentary on the Australian gold industry coming up on Wall Street Week, but also we'll be talking about the new Hemi project, and I mentioned that a moment ago in Western Australia. You just acquired this earlier this year. Can you tell us a bit more about the reserves there and the cost to develop this, and when you might be pouring your first ounces?
Yeah, look, we're very fortunate to consolidate the De Grey asset into the broader Northern Star portfolio. It was around about 20% of the combined business. It brings to us, their announced JORC resources around 13 million ounces of gold and about 6 million ounces of reserves with a development program about 3 years to get it to commercial production, which would take it to 500,000+ ounce a year asset. Again, this is a high-quality, long-life, low-cost asset, hence why it really ticked the boxes for Northern Star to acquire it in very low sovereign risk jurisdictions. So very complementary to our portfolio. We've still got to build it. We've still got to get through the approval pathways we're working at present, but it's certainly a really quality asset to add to the portfolio.
So would you say that these costs are still quite manageable? Because as we understand, there are perhaps higher risks associated with costs given the need for more capital to perhaps manage or process these semi-olfactory ore.
Yeah, so that development project as well, certainly we look at that cost profile to understand where it sits on the global cost curve. We're very encouraged by the current gold prices, as Paul spoke about, above 5,200 Australian dollars today and still above 3,300 US dollars. It's very encouraging. There's large margins from our cost bases, but really to survive through the cycles with these assets, it's where those assets are positioned on that global cost curve, and we see Hemi low in that global cost curve in the lowest quartile. That's important throughout the cycles. Gold miners are typically price takers. We've seen some of that uplift and pressure in the recent periods, but certainly there's some insulation we can do to run efficiencies and productivities into our assets. So the component of the processing facilities at Hemi are different to our other assets, but they're certainly known and globally understood, and we see that actually as a strength, a unique strength, given the scale and quality of that asset.
Stuart, we talked about these organic growth opportunities. What about inorganic growth, and what is your sense of the M&A prospects for the industry for the rest of the year? We've been seeing a fair bit of consolidation already.
Yeah, look, over the journey, Northern Star's absolutely utilised acquisitions, as we've just done with De Grey. That's the finite, the getting the asset in the first instance, and then what value you can bring to that asset. I think for us, we've got plenty on our plate now to deal with organically. I think the lower end of the ASX potentially have some synergies to liberate through combinations in the business, and I think you'll still see more of that to come. And I think there's an arbitrage between the foreign exchange between North Americans and Australian currencies that potentially make Australian assets more attractive. So there's potentially the flow of capital back into Australia when historically it was moving from Australia offshore. So I still see in the highs and in the lows, M&A is often, it's always occurring. And I think people would be dusting off some of those plans and not just betting against gold price. They're certainly looking for gains from the combination of either synergies around infrastructure, management teams, skills, scarcity of labour, and trying to find economies of scale just to combat some of the cost pressures that exist.
Yeah, of course, another macro factor that you're having to deal with along with everyone else is the current tariff environment. Now, you've got a mine in Alaska. Are you seeing any on-the-ground impacts from the tariff environment? And if so, how are you managing that?
Look, we certainly are, and we've seen even in the last year, it was about $40 an ounce impact across that tariff. And, it comes quickly. So I think there's still some interpretation around and changing and choppiness around those things. And I think in time, migration around source and supply to either cop or avoid some of those tariffs will be to the detriment or the benefit of nations or companies. We're fortunate we do have that natural hedge of US denominated costs and incomes out of Alaska, and equally we have an Australia dominated or domiciled incomes and costs from Western Australia. But a lot of the mining supply of consumables comes out of Asia. So there'll be imposts to Alaska, but to Australia there may actually be benefits in surplus of supply that reduces costs to Australian consumers. So it's just interesting we're price takers, and the changing of the tariffs, companies need to be very agile and ready to respond.
Well, we'd be remiss if we didn't ask you where you see gold prices heading from here. We heard Avril mentioning at the start there the wedge pattern that's forming sometimes means we could see a decline. So what's your outlook? Are we going to see a new floor for gold prices in 2026? And how's that being reflected in your spending and investment plans?
I think any leader of any gold company just has to have a scenario in all those situations. I'm encouraged with where the price levels are. I still see it maintaining and levelling, and I'm very encouraged on the outlook and the margins that our business is enjoying. But we've got to be realists. We've got assets that ultimately are multi-decade. They will see multiple gold cycles, and we've got to have levers and tools to deal with all those environments. But whilst the sun is shining, we will make hay and put it in the shed. And this is a pretty strong, healthy environment right now.
Yeah, it's a great backdrop to be in. Stuart, thank you so much. Stuart Tonkin is CEO at Northern Star. And thank you as well to Bloomberg's Paul Allen. More ahead on the Asia trade. This is Bloomberg.
And we're setting up for the Hong Kong market opens. HKEX CEO Bonnie Chan saying that she's confident that the IPO boom in Hong Kong will continue thanks to international investors' renewed appetite for Chinese assets. Chan also told us how the exchange plans to sustain its strong performance following a record profit in the second quarter.
You know, what really stands out for me for this quarter is the fact that it's riding on a pretty sustained momentum. If you look at our results, this is actually another set of record half-yearly results. We deliver a pretty strong set already for the second half of 2024. Gradually, we're seeing a return of interest from international investors, and they want to, again, look for opportunities to deploy more capital to this part of the world.
The key question is it sustainable? What could extend this streak?
We saw this momentum started actually in the second half of last year, and so far it's been sustaining quite well. International investors are really, again, focusing on China assets. And I think as they try to come back to treasure hunt, it is a very good thing that we have equally a robust pipeline to match their appetite. We have currently over 200 companies already having filed their applications. And in fact, on a daily basis, I'm speaking to a lot more. So I think, with the backdrop of, really the interest returning in earnest, as well as all these very exciting investment opportunities coming online, I do hope that the momentum can carry on.
How confident are you that Hong Kong can reclaim the #1 IPO venue this year?
At the moment, we're in a very good position, and we do have the pipeline to help us deliver and stay up there. But to me, the more important thing really is to make sure that we are able to support the fundraising needs of these companies. And this year, I keep talking about the IPO pipeline. We also need to look at the follow-on fundraising, which in fact has raised more money than the IPO proceeds. So year to date, we have raised about $16 billion, close to 17 for by way of IPOs. But we have actually more than $40 billion raised by companies already listed on our exchange. So long as we continue to support the fundraising needs of these companies, we continue to improve our listing framework.
Are you still doing a lot of marketing, or do you think companies are starting to come to you now?
Well, I think both. I mean, companies certainly, I think, saw how well we've done in the IPO space. And so I think on the average, I'd probably meet 2 to 3 companies per day. And I want to expand the universe a little bit. I think it's very encouraging that in the past few months we have seen an increased appetite of companies beyond just the mainland China wanting to pick Hong Kong as their listing venue. So year to date, we've listed companies from Thailand, from Singapore, and there are more in the pipeline. So I certainly will do more in terms of this marketing activity.
There are those out there that do call this recovery you're seeing as something that's made in China. Mm-hmm. That what you're seeing in terms of the pipeline has been really driven by government policy, geopolitics.
Well, first of all, I don't think I'm surprised. I mean, just considering that China is the second largest economy of the world, and it's capable of producing so many exciting companies which investors around the world want to invest in, right? So to me, it's natural and totally understandable, this made in China phenomena. But that said, given that Hong Kong is an international financial center, and we stand in the middle as a super connector between mainland China and the rest of the world, what I would like to see is to really continue bringing more participants into the universe.
HKEX CEO Bonnie Chan speaking with the China Show co-anchor Yvonne Mann. And as the CEO was just saying, there continues to be investor interest globally back into Chinese assets, and we continue to see Hong Kong shares outperforming the S&P 500 this year. And mainland listed shares in Shenzhen and Shanghai, they're actually poised for 4 straight months of gains as well. Let's bring in our China correspondent, Min Min Lo. So, Min, what are you seeing in terms of the momentum? Can this continue for Chinese markets?
Yeah, I mean, if you look overnight, the Golden Dragon pointing up today, which is going against the grain of the tech-driven losses that we saw in the U.S., also going against the grain of the broader sentiment here in Asia as well. And it's interesting, right, as you see, there's been this exuberance in the Chinese markets, and it's really a divergence between what we are seeing in the capital markets versus what's happening in the real economy, because last week we had a slew of bad data, from the activity data to the housing data to the credit data. But analysts are saying that it is that weak confidence in the private sector that is keeping people from taking up more loans, and all of that liquidity is now flowing into equity markets, because of course the bonds are also not giving you very high yields, right, given the low interest rate environment. But one sign pointing to a very healthy rally here is that we are seeing this broadening out of the rally on the Shanghai Com and the Shenzhen stock indexes. If you see the rally yesterday, about 2,000 out of the 5,700 companies on both indexes participating in that rally, and it shows you that it has gone beyond the usual favorites, right, like the dividend, the high dividend plays like the banking sector as well as the AI biotech sector. And analysts believe that because this has been such a slow resurgence that we are seeing in the Chinese stock market, it is different from the fast sort of boom and bust cycle that we saw in the past, and they believe that there is still legs for this rally to continue running.
And of course, the earnings season could be another catalyst, and we have the streaming company Kuaishou reporting today. What are we expecting?
Yes, Kuaishou, we are looking at about 11% growth in both revenue as well as net income, but investors will be most closely watching the outlook on Kling, which is this text-to-video app, an AI video generation app that really have exceeded analysts' expectations so far in terms of its ability to monetize. The company earlier in the year provided a guidance of about $100 million in revenue from Kling this year, but Citigroup is saying that they are seeing potential upside to that, because this is seen as a strong contender against some of the other similar tools offered by the likes of Google or ByteDance, because it is priced competitively, very high quality product. But when you look at some of its other services, including ad revenue, that's where it could be facing headwinds because of the slowdown in the economy. But it could be supported though by the government subsidy so far that could help lift the live stream e-commerce earnings there. So a lot to watch, but certainly I think investors will be most highly anticipating the numbers from that Kling platform.
Bloomberg China correspondent Min Lo there. In a busy earnings season over in China, we'll be speaking with the CEO Sung Kim and Casino Biologics as well after the results. You can catch those exclusive interviews at the times shown on your screen right there. This is Bloomberg.
Here are some of the stocks to watch when markets open in Hong Kong and mainland China. Pop Mart among them, but also Baidu and Laopu tracking those shares after they reported earnings on Wednesday. In terms of Pop Mart, we're watching after its shares rose following the launch of new mini Labubu dolls. And of course, chip stocks remain in focus after the rout in tech stocks continued on Wall Street. Let's take a closer look at some of them as well, including the likes of SoftBank, Samsung, SK Hynix. Remember, investors were really digesting the $2 billion plan to invest in Intel. Does this come against the backdrop of some political noise, or is this making business sense for the company? It is extending already the 6% slide from a day ago into today's session. Samsung is a bit of an outlier, interestingly, today versus what you're seeing in SK Hynix, which is going the other direction. There's been some trader chatter about how it is coming closer to getting its approval from NVIDIA on high bandwidth memory chip, Shery.
And that will make such a big difference when it comes to really that progress in the advanced chip sector for artificial intelligence, right? But you said it, Avril, is really that broad pressure on the tech sector. We had the Nasdaq 100 in the overnight session falling for a second session. We're seeing the Magnificent Seven also seeing the longest losing streak since April. U.S. futures at the moment down 0.2%. As you can see, China A50 futures closing higher by 0.4%. We're watching China's 30-year yield also rising to the highest since December. December. In fact, do keep an eye on the super long yields here in Japan as well. The 30-year yield very close to record highs, the 10-year yield around the 2008 levels. Fiscal concerns around the world. That's it from the Asia Trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.